Here at the Masternodes, we are not making any claims as to income you may earn. Before entering any agreement, please use caution and seek the advice of a professional advisor, such as attorney or financial advisor.
Please ensure your own research is done before investing any money into the market.
What is going on, everyone? Thank you guys for tapping into today's podcast. My name is Ryan, the crypto guy, or Ryan Prendez.
Hey, what's up, guys? I'm Nestor Sanchez.
And we are the Master Nodes. Thank you guys again for tapping into today's podcast. Remember to follow and subscribe to our personal social media accounts. Mine is at Ryan, the crypto guy. And my boy's Nestor's is at Masternode1. Make sure to stay to the end to hear about some additional resources that we are going to provide you guys to get you guys a little bit more zoned into cryptocurrency. But without further ado, I'm going to let my boy Nestor take it away with today's topic, different types of traders.
Yes, different types of traders. So we're going to be talking about long, short, all in between. But we want to preface this with some vocab so that we can all be on the same page. So we're going to talk about limit orders. A limit order is a price that you set to either buy or sell a specific asset in order to enter or exit a trade successfully. And we're also talking about stop losses. A stop loss is also a set price at which an asset will be sold or bought in order to limit losses in the market and ultimately manage your risk.
All right, so now jumping into it, there's two different types of traders that we're going to be breaking down. There's long-term traders and short-term traders. So short-term traders buy and sell usually within the same year, and they also pay higher capital gains tax. There's different types of capital gains tax, and that's usually either long-term capital gains or short-term capital gains. Because they're short-term traders, they're going to be paying the short-term capital gains tax. Another thing that they could do is they can utilize leverage in order to generate higher earned income, which is exactly what we do at IM and something that Nestor's going to be getting into towards the end of today's podcast. And another thing is, in order for someone to become a successful short-term trader, one must utilize a proper trading strategy. They must have risk management skills. They must also acquire technical analysis and have a market edge to be profitable in this space. Without these things, a short-term trader is going to blow their account, or they're going to get rid of all their assets trying to catch up from, the mistakes that they may have made or lessons they may have learned along the way.
Yeah, now the flip side of that, we have long-term investors where they buy and sell an asset after holding on to it for more than a year. Typically, they pay lower capital gains taxes, which is actually a plus. They kind of have to worry less as well. They utilize compound interest to grow their funds exponentially and over a long period of time. And they must utilize consistency. They have to do research. They have to spend time in these markets and use fundamental analysis in order to become profitable.
So a short-term trader and a long-term trader are kind of like the umbrella terms of what it is to be a different type of trader. Now we're going to jump into what the two different types of short-term traders are and the two different types of long-term traders are. So first, we're going to be talking about a scalper, which is the first type of short-term trader. So scalping is a trading style that specializes in profiting off of small price changes. Usually, scalpers prioritize high volumes off of small profits, trading from 30 seconds to about a couple minutes, focusing on candlesticks within this time frame. An example of a scalp trader's typical day is something like this. They usually wake up and expect to be ready by market open. They input their trades, and within 1 to 3 hours, they usually meet their daily, weekly, or sometimes, if they're having a really good day, monthly goals. But it's not always like this. This is what scalp traders usually expect to do. The amount of time they expect to be actually working on, analyzing the charts, applying their technical analysis, and doing everything they need to do to ensure they meet their profits. But the market is always unpredictable, and sometimes they could spend longer. However, typically it's usually within 1 to 3 hours of the market open.
Yeah, and like you were saying, every scalp trader is kind of different. And what's also cool is with cryptocurrency, it's open 24/7. So there isn't really a market open, but we have stocks that only are open certain times. But they're able to now with Bitcoin and cryptocurrency trade at any time, anywhere, any day. And then another short-term investor would be a day trader. So a day trader can typically hold their positions day to day, or in even some cases within the day, hour to hour. And then we have a day trader, which executes a relatively large volume of short and long trades to capitalize on that day. One example of a day trader's day could be pretty typical to a scalp trader as well. They're both very short term. They can expect to wake up market open or whenever they set their time to trade. They will input their trades for that day and basically kind of set it, forget it, helps them set up an active trade that they can set, forget, and then they can come back later if their trade didn't hit the profit target or hit their stop loss, reanalyze for the next day when they make their trades.
So now moving on to a long-term trader. So an example of a long-term trader would be a swing trader. Swing traders attempt to capture short to medium-term gains in an asset over a period of a few days to several weeks. Usually a swing trader makes trades that he or she will be in and out of in a few days, or they plan to be in for some weeks. So swing traders are always planning ahead. If they think an asset is going to go way past their, take profit level that they set, then they're going to be entering into a swing trade where it's like much, much higher than any take profit that they could think of, because they know that that asset is in for a good ride going up. Typically, swing traders want to have a stop loss and a profit target so they make their money and they limit their losses. Really, any trader in this market or in any market wants to make sure you guys set up buy orders and stop losses, because those are definitely going to save you. Let's say you're not paying attention to your charts and, it starts going under, an X amount, and you're leverage trading. Well, once it hits, that X amount, your whole account could be blown. So why risk that? You can go ahead and just set up a stop loss, ensure that if it goes or hits that stop loss, it cuts off your trade. So that way you're not, risking your entire account off of just one trade. Same thing with the buy order. Let's say you're not paying attention to the charts and you're like, oh, I want to go ahead and I want to, hopefully if it reaches, 81, like let's say Bitcoin was to reach, 50,000 and you want to put in a buy at 50,000 per coin, then, you're not going to be staying up all night trying to look at that. So what you would do is you would set up a buy order at 51 or 50,000. And as soon as it hits the 50,000 range, it'll go ahead and automatically buy whatever amount of that asset you're trying to buy.
Yes. And another thing is you definitely want to have a stop loss, because we don't know all the time, right? We can do all the technical analysis, we could do all the fundamental analysis, but if there's bad news, let's say, then we're in some trouble because we couldn't account for that, right? So that's what even some short-term traders use. They use the news in order to expedite their funds in order to make a lot more money, because they know that there's going to be a lot of volume, whether it's because of good news or bad news, and they're able to capitalize off of that. But another long-term trader would be, and this is like the longest term trader, and it's called a position trader. So a position trader buys an investment for the long term in the expectation that it will appreciate in value from either months at a time to years even. And these are typically beginners, right? Because it's very easy to kind of just buy into an asset over time and continuously add to that position, which is called dollar cost averaging. And it's going to help with emotions. It's going to help with a lot of different things, taxes and all that stuff. But this is good for beginners. You're setting a position. You have to do fundamental analysis also. But basically, you care about the long term. You're not really interested in temporary dips in the market, and you're focused on the later outcome. So the only reason you would be focusing on dips is to actually buy more, so that when the asset appreciates, it's going to get a better percentage over time. And they're not sitting at the computer screen, writing things down, constantly analyzing the market. They don't need to be on there all the time charting, because they don't really care about the short term. They're just buying into that position and adding to it over time. They focus on fundamental analysis mainly, rather than technical analysis. Like I said, they're not really charting, but what they do need to do is make sure that all their cryptocurrency, if it has a coin cap, they got to look at that. They got to check at the market cap. They got to check that it has utility as well. These are all things with fundamental analysis. And this is more of a set it and forget it type of investor. They can literally be dollar cost averaging into the S&P 500. This is how many millionaires are made. They're just dollar cost averaging into the S&P 500. Over time, they're getting 10% every single time. So that's a great way to help you take care of your emotions, add to your portfolio, and grow over time.
And that kind of wraps up today's podcast, everyone. Thank you guys for tapping in with us. We appreciate it. We truly do. Without you guys, we would not be able to be here making these podcasts. So thank you guys. And remember to follow and subscribe to our personal social media accounts. Again, mine is at Rilo Crypto Guy. My boy's Nest is at Masternode1. And subscribe to the Masternodes media accounts on Instagram, Facebook, LinkedIn, TikTok, and Twitter, all at the Masternodes. Our visual podcast experience can be found on YouTube, and our audio podcast experience can be found on Spotify, Apple Podcasts, Google Podcasts, Stitcher, and all your other favorite podcast sources. Finally, remember to visit our website, www.themasternodes.com, and subscribe to our email list to receive the latest and greatest cryptocurrency information.
Yes, and we're also giving out information every day on our Discord, whether it be vocab, whether it be questions, polls, ways to get more active with you guys. So if you want to join that Discord, you can always comment on the YouTube or DM us on any of our social medias. And we have another great opportunity for you guys. The Masternodes actually partnered with a multi-million-dollar corporation that teaches you how to trade, that teaches you how to invest in cryptocurrency, whether it be fundamental analysis, technical analysis, the whole 9 yards, and they give you trade ideas. It's very, very great opportunity, very lucrative to be a trader. And ultimately, this is what we do, right? We want you to be making money when the market's going up, when the market's going down, when the market's going sideways. And this is the way you do that. So definitely thank you guys for joining. Have a great day.